So will the record books say that it was the month of October 2021 when the crown was officially passed to Bitcoin and crypto from gold and silver? Now, according to JP Morgan, there are right now three main drivers for Bitcoin's remarkable October to remember. So I want to get the read from Scott Martin and Milton Demirits. And Scott, let me go to you, my man, because apparently institutions now see Bitcoin as a better inflation hedge than gold. You've championed gold on this show for a long time. Is it time to throw in the towel?
I have, Charles, and I'm holding back tears doing this, but I'm good at doing that, so I won't cry. I promise. I promised myself I wouldn't cry. We sold the gold today. I can't believe it. And that was based on several factors, not because of what some of these institutions are doing, because those are not the guys to follow, in my opinion, as an independent advisor and one that manages ETFs and such. But the reality is this, Charles, because of some recent data and certainly the performance of our friend GLD and some of the other ETFs that are out there in the gold space, it just hasn't been there as far as the non-correlation and some of the upside capture. So, well, I don't think that answer is the Bitcoins or the Ethereums or the Solanas. The reality is gold is just not handling itself very well as that alternative asset space in our portfolios right now. So I just think gold is not the thing to hold right now. I don't think some of the Bitcoin stuff is right either, if that's what you're looking to replace it with.
Okay, so Milton, in the meantime, institutional investors are rushing in like gangbusters, venture capitalists. I read where Mark Andreessen's shop, the funding has gone through the roof from hundreds of millions to billions. So at least are the credibility questions over right now? Do you feel like as someone who's championed this space, you took a lot of slings and arrows from these same institutional types that you can finally say, okay, don't question the credibility anymore?
Yeah, look, Scott, I'll take the W all day. I'm sorry, but I'll take the W. I think we are definitely at the point 1% of global AUM across all asset classes is now in crypto. Of that, 50% is Bitcoin and 50% is everything else. Crypto is here. 20% of Americans own Bitcoin. This is no longer a fringe asset class. This is a diverse asset category that has publicly listed equities, including my company, CoinShares. We have ETFs with exposure to equity. We have ETPs with exposure to digital assets themselves. We have the coins. We have venture funds. We have SPACs. It is a growing and really robust category, and I'm really excited about the opportunity ahead. We see a lot of opportunity for growth. And as we like to say in the industry, Q4 is the start of the madness. We're calling it Uptober, by the way, Charles. So this is not October, it's Uptober.
Hey,
just be ready for the volatility.
Hey, that's the price of opportunity. Price of opportunity is the volatility.
But different from alternatives of yesteryear, in my opinion, but no problem.
Sure.
All right, so real quick then, I'm going to come back to you, Scott, but I do want to squeeze in with Milton, the NFTs. Where do they stand? They're also having a pretty strong month here, October as well.
Yeah. Do you want me to talk? Yeah, I'll talk about NFTs. So yeah, look, I think, people love buying luxury goods. LVMH is a $400 billion company, and they produce artificial scarcity, right? People buy handbags, people buy expensive cars, watches. NFTs are a digital flex, right? For people like me, I spend all of my time on my laptop. I don't need Chanel bags. I need digital flex. And so I think NFTs in many ways are filling this interesting new niche. As we enter the so-called metaverse, as we live increasingly online, we need different ways to sort of flex online. Right now, NFTs are very much focused on art and sort of displaying our uniqueness. We're also calling them PFPs or profile photo NFTs, but we're also seeing games using NFTs, luxury brands using NFTs. And I think it's still a really early space, but one, again, where there's tremendous growth for multiple different types of opportunities, whether it's new brands, legacy brands, a lot of space. I
only got 40 seconds. I got to give Scott the last word. Scott, she mentioned the metaverse, and flossing on the metaverse. It sounds like you and me are going to be stuck outside the metaverse fishing. I mean, you're going to jump in any of this stuff, maybe some of these equities, Riot, MARA, Coinbase, any way you're going to get exposure to this space?
Yeah, we have some clients that have some of the Riot, some of the BLCN blockchain, and I think those are good if that's the exposure you want. I also agree with Melton, though. You can get pure exposure to the coins through Coinbase, so you can actually trade the exact coins. And one quick point on the NFTs, you can't break into the stores and steal them. Gucci and all those, at least they're unpreventable that way.
We got to leave it there. I'm handing it over to Lauren Simonetti. Lauren, the CP...